Welcome back to the channel, everyone. I know it's been a while since my last video, but hopefully I should be on a better schedule now. I've got more free time that I can spend making videos for you and providing better content in their Discord. So if you're not part of that, make sure to join. I do post a weekly watch list with trade setups of trades that I do take, and then I've started posting post-trade analysis. So all the trades that I do take from the watch list, I'll give you reasons behind it, reasons why it might not have played out, and how you can improve. But in today's video, I'm going to be talking about doing top-down analysis, so starting on the higher time frames, analysing that, and then going down to the lower time frames for your confirmation entries, with a step-by-step process that you should be able to follow on the charts as soon as you finish watching this video. So yeah, before we get in, please make sure to like and subscribe, and follow me on Instagram and join the Discord. Yeah, let's get into it. So as always, I'm going to do a little textbook setup kind of thing, and then go into a chart example. So here is the step-by-step process that I use when carrying out top-down analysis on a pair. I'm going to start off on the high time frame. For me, this is the monthly or the daily. If you're trading on like the very low time frames, it could be something like the hourly or the 4 hourly. But that's not really going to give you as good an idea of where price is going. So I like to trade higher time frames and then use even higher time frames, such as the monthly and daily, to get my directional bias. So you can do that step 2 in 2 ways, either by looking at market structure, which I talked about in the last video. So if you're not too familiar on market structure, do go and check that out and then come back here. Or you can use order flow, which again, I made a video on that. So if you're not too confident in that, watch that video, check out the charts, then come back here, and you should be able to carry out top-down analysis. And then step 3, probably the most important step, is waiting for the high time frame bias and low time frame bias to align. So the directional bias, if high time frame is bullish and low time frame is bullish, then you know you want to be going long. But if they're kind of contradicting each other, if the higher time frame is bullish, but the low time frame is bearish, then it's probably best to stay out of the markets for now. And then you're going to look for your confirmations, which I'll give a few examples. And obviously just step 5, kind of a main step as well, manage your risk. Don't overtrade, know where your stop loss is going to be and where your take profit is going to be, and then just let it play out. So if we imagine that the high time frame is going to be bearish, so you've got market structure or order flow looking like this, with some complex pullbacks, something like that. This is step 1, start on high time frame. This is the monthly. You can see market structure is bearish, creating lower lows, lower highs, lower lows, and so on. So you know your directional bias is bearish, and so on the lower time frames you're going to be wanting to go short. But something in this area here, you can see that it looks like price is bullish, and so on the lower time frame, this would be step 3. So step 1, high time frame, got your bias, it's bearish for market structure, or you could have order flow as well. For me, it's like supply zones, confirming your order flow here and here. But yeah, step 1 and step 2 have been done. We've got a bias, it's bearish, but in this little area here, it looks like price could be bullish. So on the lower time frame, for example, you could see price coming like down, then it looks like a change of character and price is going bullish again, and so you might want to look to go long. So this is what the lower time frame would look like in this little grey rectangle, and so you might be trying to go long from here. Obviously you can counter trade, get in at like pullbacks. Obviously it doesn't reach, but there will be times where it reaches a demand zone and then pushes up, and you can buy to then sell off at a new supply zone, but that's more advanced, so only do that if you are a confident trader and you're profitable trading with the trend. Yeah, so what you want to do in step 3 is wait for the high time frame and lower time frame bias to align. So a high time frame it's bearish, and then if here you wait, and if you get a change of character, then you can know that you want to go short. And this is where confirmations come in, step 4. If you can trade on this lower time frame from, say, the new supply zone, if it followed your rules, you know my 3 rules. If it's taken out liquidity, that's a good sign. Created imbalance, break of structure, and aligning with the high time frame trend. Whatever rules you have, then stick to them. If you don't have rules, check out my rule-based video if you'd like. And then number confirmation is just looking for order flow. So you might have something instead. I'll just delete this. Price could go up, come down, touch there, and you can get in at the second one. As you may know, I prefer trading from the second supply zone once it's been confirmed. That's a nice confirmation to me that the big institutions are looking to go short and again at their premium price, and then go short again, that you can catch the move. So just to go over this again, I feel like I might have spoken quite fast. If I have, just let me know in the comments, and in future videos I will try and slow down. But step one, start on the higher time frame. We've done that here. Get a bias, market structure, order flow. You can use either. This is just a technical example, so I can't really pick one, but market structure is bearish and order flow is bearish. Obviously this is a perfect example. It won't look like that in the real charts, so you're going to have to use your experience to determine what the trend is, but it's not too hard once you get the hang of it. So our bias is bearish. Step 3, wait for the higher time frame, lower time frame bias to align. We've done that in this area. It's been going bullish. We wait for a change here to show that it's going bearish again. So now our higher time frame is bearish and our lower time frame is bearish, which means we have confirmation to go short. And stage 4, look for your confirmation. Either, order flow, just change character, whatever it is that you trade. Once liquidity has been taken, you can get in. And step 5, manage your risk. So you know where your stop loss is. Target. I target 1 to 3. You can target the recent lows because they're probably going to get taken out. Whatever you do, just stick to it and make sure you back test and forward test. Get some data, see if you can improve your strategy, and then work on it from there. But that's the textbook setup and the process. So let's get into the live example. So this chart is actually something that I sent to the Discord, a little promo, but if you're not in it, go check it out. I was looking either to go long from this area here or short after some confirmation in this area, but what ended up happening, it didn't touch there. I ended up sending up these 2 zones into it. But how I did that, started on the monthly. We get the process up. You can see trend, bearish market structure. You're creating lower lows and lower highs, and especially recently, there's a strong bearish momentum. Not much pullbacks, which can be dangerous to short, but I'm not trading long term, so even if there's a pullback, I can still get in on some shorts before that happens, because the trend is more likely to continue bearish than reverse. So that's step 1 and 2. They kind of work together. Got into the higher time frames. I found my bias. It's bearish. If you go into the daily, you can see actually there is some bullish market structure here, but I know that my higher time frame is bearish. You just zoom out a bit and you can tell you don't really want to be longing in this market yet. I know it kind of works together with my zones marked up here. I feel like price will come back here before going up if it does want to go up. So then I went down to the 8-hour time frame. Step 3 is waiting for higher time frame and lower time frame bias to align. You got your higher time frame bias is bearish, but on this 8-hour you can see bullish market structure here. You wait for a change of character or something. I was waiting for it to come up here and then push down, but it didn't. It won't always touch your supply zones, so you've got to be able to react. And you've got a broken market structure here and a nice supply zone left here with some imbalance between this candle and this candle. Price came back to touch it. I don't get off of the first zone. I waited for confirmation, but now my higher time frame and lower time frame bias have aligned. Both of them are bearish. And you can either stay on this time frame or looking for confirmations, you can go to an even lower time frame, which is what I did. So I went to the 4-hour. I like 4-hour and hourly. You saw price tapped into the 8-hour supply zone before selling off again. Also breaking market structure here. Following my 3 rules of SMC video. Imbalance created as well. Price tapped into it, sold off a bit, and then we had FOMC. Price almost touched our stop loss, but because the institutions don't want it to go above this point, because that's where they sold, it doesn't go above there, and then they tricked buyers into buying, and then it sold off, and I followed my risk, which was going for a 1 to 3, which closed out nicely. So just to get those rules back, we started on the higher time frame, which was the monthly, got our bias, which was bearish from market structure. Then went to a low time frame, the 8-hour, or the 4 hour. Waited for market structure to change from being bullish to bearish, which it did here for a change of character. So then process 3, the step 3 is ticked off. Both the high time frame and low time frame are aligned. So now we can look to go short with confirmation, which for me was using order flow. And then I managed my risk, risking 1%, targeting 3%, and played out nicely. Obviously, this is the trade that I picked. It didn't work out on a couple of other pairs. I traded Euro USD as well. It didn't work out. And AUD USD, which didn't work out. Well, it worked out from this zone, the second zone, but not the third. So I made a bit of money on the second, but not on the third. But overall, still profitable over the 3-4 trades that I took. So yeah, that's basically the how to do top-down analysis. I hope it's helped you learn something. If it has, again, please do leave a like and subscribe to the channel. We're growing quite fast now, almost at 500 subscribers. That is crazy. But thank you for watching, and I hope your training goes well.